In this video, we're going to talk about the main accounting equation. So the main accounting equation is assets equals liabilities plus shareholders' equity. So this equation is very important because this must always remain in balance, and I kid you not, an entire 4-year accounting program, essentially accounting worldwide, is literally based off this small little formula. All we're doing is we're just diving into each one in more detail, each account in more detail. Correct? So let's just do a quick example. So let's just say the assets of a business are 50,000. If the liabilities are 20,000, then shareholders' equity must be 30,000. Because remember, this must always remain in balance. 20,000 plus 30,000 equals 50,000. Now we could rearrange this formula into two different ways. So we could do liabilities equals to assets minus shareholders' equity. So if liabilities is 20,000, we could derive this by taking assets which are 50,000 and subtracting it by 30,000 shareholders equity. Or we could do shareholders equity equals to assets minus liabilities. So if shareholders equity is 30,000 equals to assets of 50,000 subtracted by liabilities of 20,000, once again, this remains in balance. Very important. Now let's tie the main accounting equation into debits and credits. So remember, we have 5 main accounts. We have assets, liabilities, shareholders' equity, revenues, and expenses. So assets are debit accounts, liabilities are credit accounts, shareholders' equity are credit accounts, revenues are credit accounts, expenses are debit accounts. So when we say an asset is a debit account, that means simply on the debit side it increases. That means by default on the credit side it decreases. When we say a liability is a credit account, that means on the credit side it increases. That means by default on the debit side it decreases. So shareholders' equity is also a credit account as well. However, there's a huge misconception where students think that shareholders' equity is a debit account. So I'm going to explain to you why shareholders' equity is a credit account using the main accounting equation. So to recap, the main accounting equation is assets equals liabilities plus shareholders' equity, and this must always remain in balance. Or in other words, debits equals credits plus credit. So as you can see, for this main accounting equation to remain in balance, shareholders' equity must be a credit account because a credit plus a credit equals a debit. So at all times, debits must always equal credits no matter what. That's the number one rule of thumb in accounting. Debits must always equal credits. And also assets equals liabilities plus shareholders' equity.